Welcome to day 2. So yesterday's class, let us sum up. Yesterday we discussed what do you mean by a law, what do you mean by a tax law, what are the components of law, what is delegated legislation, rules, notification, circular, etc. And then tax, distinction between direct taxes and indirect taxes, and then nature of different indirect taxes. This is very important. Today we are going to discuss taxable event. So every tax law will have a taxable event. Excise duty is on manufacturing of the goods. Sales tax is on sale of goods. Service tax is on service of goods. Okay. And what are the tax laws? And very important slide. What is the concept of input tax credit? Actually, what the chapter you have on input tax credit is summarized is in one slide. If you understand this slide means the chapter itself is over. Even there again I have to revise this slide only. So much important and in very depth we have discussed how it works. And what are the drawbacks? We said there are multiplicity of taxes, multiple taxable events, multiple tax laws, so many returns, so much of complaints. Okay, so it is difficult. And most importantly, cascading effect. Since there is no input tax credit concept, the input taxes, that is the taxes paid at the input stage, are getting included in the cost structure, consequently in the selling price, and on the selling price you are applying your output tax. So the selling price is inclusive of taxes and you are applying a tax rate on a price which is inclusive of taxes. So you are calculating tax on tax. That is called cascading effect, and therefore increase in price, inflation, and compliance burden. These are all the drawbacks. So that is why government thought of introducing a new regime. It's called a new regime of indirect taxation, called a single tax called goods and service tax. So anyway, what are all the taxes you are levying under the existing laws is nothing but either on goods or on a service, correct? Excise duty, goods. Sales tax, goods. Service tax, services. Luxury tax, services. Entry tax, goods. So at the end of the day, if you look at it, will be either on the goods or on the service. Then why we need so many tax laws? Why can't we club them? Why can't we make a single law and we put a name called goods or service? Tax on goods or tax on service? Goods tax, service tax. Combine goods and service tax. We are clubbing everything and giving a name called goods and service tax. Then why there was a delay? Sir, when we know this, is it that government knows only in the year 2017, not before that? Government knows it. But as discussed in the first class yesterday, we said the law making authority should make laws within the powers given under the Constitution of India, right? At the end of the day, it cannot be ultra-vires the Constitution, correct? Whereas if you see Constitution of India, Schedule 7, Union list, state list, concurrent list. Service tax cannot be levied by state. Excise duty cannot be levied by state. Service tax also cannot be levied by state. VAT cannot be levied by center. They have limitations. Whereas if I bring goods and service tax, one government, let us say central government, should be able to charge both. They should have the power to levy sales tax, they should have the power to levy central tax. Similarly, state shall have the power to levy goods and services, to levy tax on services and goods both. So They need to amend the Constitution of India. Got the point? They need to amend the Constitution of India, and amending the Constitution of India is not so easy. It requires 3/4 majority in the parliament to make an amendment to the Constitution of India. That's why it took so long. So Vajpayee, the then Prime Minister, the first thought of this, introducing this goods and service tax in the around 2000s. But it has fructified in the year 2017 by amending the Constitution. And then now we said, now let us go for a single regime of indirect taxation called goods and service tax. Then what is the methodology? What is the methodology? How to implement? So what is you mean by how to implement? That means ideally GST means one law, right? That means there should be one tax. In many countries have adopted one rate also. If you look at Singapore, they'll have one single rate, 7%. Whether you buy rice or BMW, 7%. Across the country, one rate, one nation, one tax, one indirect tax, one rate. It's over. Take input tax credit, pay output tax. It's done. But in countries like India, we are into federal structure. Union government have their own powers. State government have their own powers. Union government cannot interfere with the state powers. State government cannot interfere with the central powers. And when you say it is one nation, one tax, then the tax collector should also be one. Are you getting this point? The tax should be collected by one authority. Correct, no? Let us say center decides to collect the GST. Central government decides to collect whole GST. That means what? Will the states accept? States accept? No. Central government says, I will first collect the GST, then I will distribute. Then what the state should do? What is their role? They should form a queue before the central government asking for their portion. Correct? So they don't agree. And they have not agreed also. So there should be such a system where both should be able to collect the taxes simultaneously. They both. On a transaction, both should be able to collect the taxes. Then there won't be any dispute. Correct? It's a political issue also. Different governments may treat different states in different manner. May. So states said, no, we also want the power to collect the indirect tax. You cannot take away entirely my authority to levy taxes. Will you accept if you are a state government? No. No. So nothing doing. We also will be there in the game. You went to play a cricket or some game. The captain is asking you to sit out and watch the game. You are not in the 11. How do you feel? Will you accept? No. I will also play. Correct? Huh? So, see, in the earlier regime, there were multiple taxable events, right? We discussed excise duty. When you are manufacturing and clearing the goods, you have to pay excise duty. And then at the same time, when you are selling the goods, you have to pay VAT if it is an intrastate sale. And if you are selling interstate, you have to pay CST. If you are providing service, you have to pay service tax. You are providing a hotel accommodation, you have to pay luxury tax. You are allowing the people to enter into the cinema hall to watch a movie, you have to pay entertainment tax. See, these are multiple taxable events. Now, we'll keep everything away. Now, there is only one taxable event. One law, no? So there should be one taxable event, and that is called supply of goods or services or both together. It can be together. We'll discuss as we go along. So now the taxable event is supply. So on every supply of goods or supply of services, GST will be collected. So what will become the taxable event? Supply of goods or supply of services. Now let us first discuss about the intrastate supply. It's like an intrastate sale. What is an intrastate supply? What is an interstate supply? What is import? What is export? We'll go along. It will be dealt by the IGST Act. Okay. For the time being, intrastate supply means a supply taking place within the state. For a layman understanding, seller is also in Andhra Pradesh, buyer is also in Andhra Pradesh. The goods are also moving within the state of Andhra Pradesh. This is called intrastate supply. So there is a supply of goods by A to B from Visakhapatnam to Vijayawada. The goods are moving from Visakhapatnam to Vijayawada. So what kind of supply is this? Intrastate supply. And we said both shall have the power to levy the tax on a single transaction. Now on this, now both want to levy tax. State also wants to levy the tax. Center also want to levy the tax. And they will fix the rates of tax in GST tariff. Yesterday we discussed what is tariff. So you have to go to the tariff and you have to see what rate of tax is applicable for your goods, and there will be a system of organization of the tariff called harmonized system of nomenclature, which is long back we have been introduced and we have been following under the custom and central excise law. The same is now adopted for GST. HSN codes. You will apply 4-digit code, sometimes 6-digit code, sometimes 8-digit code. Based on that code, for every product there will be a code, HSN code. Against that code there will be a rate of tax. Okay. So now they have prescribed 4 slabs. We said Singapore having, sir, only one rate. Why we are having multiple rates? Because their economy is different, our economy is different. Their system is different, here system is different. Correct? Their per capita is different, here per capita is different. There are poor people, there are middle class people, there are upper class, there is a rich class. So they cannot fix the same rate for rice bag and BMW car. They want to collect more from rich people, less from poor people. So some discrimination is to be there, right? So they said 5%. I'll start one category. There is a 5% category. I'll put in there some goods, some services. Then I'll fix 12% category, some goods, some services. Then I'll put 18% category, some goods, some services. Then I'll have 28% category, all luxury cars and all attracts 28% category, cement 28% category. In addition, sometimes I will levy another tax called cess, GST compensation cess. We'll discuss in today's class itself. So let us say the example that we have taken with 18% rate of tax. Now both have to levy, right? Both have to share this tax revenue. Then what proportion? Next question. What is the proportion? Okay. Chalo, 50-50. 50% to you, state government, 50% to me, central government. So 9% to you, 9% to me. Since this 9% is collected by the state government, it is called state GST. That is how SGST has come. You are reading now, SGST. So why this is called SGST? Because this GST is collected by state. Since central government is collecting the other portion, it is called CGST. Okay. So for every intrastate supply, will attract two types of GST. State GST, central GST. You will go to the tariff, you will pick up the rate 50-50. If it is a 5% category, 2.5, 2.5. 28, 14, 14. 18, 9, 9. 12, 6, 6. So every intrastate supply will attract both SGST, CGST. 9%, 9%. This is called concurrent dual GST structure. Concurrent, simultaneously. Dual, two GST structure. So simultaneously, both by the central government and state government will levy the GST on the same transaction. Correct? So that is what. So therefore, India has adopted concurrent dual taxation structure, and it will be levied by the center and the state simultaneously. And respectively, they allow ITC, state, SGST, they will give input tax credit for input SGST. Central people, they will allow input tax for central GST. That is the CGST paid at the time of input stage. For example, A sold to B, intrastate supply. Now A collect SGST, CGST from B. Now A will take credit of SGST in SGST credit ledger, CGST in CGST credit ledger. And it goes on. Okay? Okay, fine. It is fine. Intrastate supply means it's good, wonderful. Now we understood how intrastate operates. But the difficulty is interstate. While fixing the system of levy of collection of GST on interstate supplies of goods or services, one should keep in mind the destination-based taxation. Correct? See, only when you follow destination-based taxation, the flow of seamless credit, ITC, across the supply chain is possible. I'll give an example. We'll take central sales tax, that is before GST. When you are selling the goods from Andhra Pradesh to Telangana, A of Andhra selling goods to B of Telangana. So he will have to collect central sales tax. Central sales tax is a union list item in the 7th schedule to the Constitution of India, but it says the central sales tax shall be levied by central government but collected and retained by the state from where the sale takes place. It shall be collected and retained by the state from where the sale takes place. That means A of Andhra Pradesh selling goods to B of Telangana. So the sale is taking place from Andhra Pradesh to Telangana. So CST will be collected by Andhra Pradesh state government. Whereas the goods are destined to Telangana. Goods are consumed in Telangana. Tax is paid by to Andhra Pradesh. Are we following destination-based taxation? No. If this is the case, the buyer in Telangana, the buyer is registered in Telangana, is doing business in Telangana, can he ask input tax credit of CST paid from Telangana government? No. Why? Why? The A has paid the central sales tax to Andhra government. How can Telangana government give credit? You understand? When I give loan to X, I can only ask X. X only can give me. Can Y give me? No. It is like that. Now Telangana government will ask B, boss, you paid your input CST to a person in Andhra who paid to Andhra government and you are asking me to give input tax? Is there any logic? No. So therefore there is a cascading effect for CST. So now the buyer of B has to add the central sales tax to its cost and then sell. On that sale, if it is an intrastate sale, he will charge VAT. If it is an interstate sale, again he will charge CST. Whatever may be, output tax will be there. The output tax will be levied on his selling price, which includes CST. That means you are calculating output tax on input tax also. Again, cascading effect. Now, if the same system is followed now also, there is no point in introducing GST. Correct? Is there any point in introducing GST? So it should not happen. So interstate supply should be taxed in such a manner that the buyer state should be able to give input tax credit. See, central portion there won't be an issue because all the CGST is going to one pocket. Which pocket? Central government. So they can give, whether intrastate supply, interstate supply, they can give input tax credit. But if this is the way interstate operates under the GST law, the input tax will go to one state and the buyer state will not be in a position to give input tax credit. Correct? So as a result, the buyer cannot claim input tax credit. But what is the main aim? Our aim is to follow destination-based taxation under the GST. Correct? And to allow seamless credit across the supply chain, there should not stop the flow of input tax credit. Then how should we do? How do we do? One option. What is that one option? The seller in A of Andhra should pay tax to Telangana. Then Telangana has got input tax. Now the Telangana buyer is in turn selling. Now they can give input tax credit. But it doesn't seem to be practical. How can a person in Andhra go to Telangana, register there, because he need to be registered, he should have a number, registration number. Otherwise, how the government will know who is paying? Register there, pay taxes there, file returns there, in addition to Andhra. Okay, one state he will manage. That is, he is selling goods to 30 states. Now what he should do? He should take a railway pass, monthly pass. You have to go on to the next state, register, pay there, next state, pay there. Is it possible? It doesn't work. Therefore, they introduced a system called Integrated Goods and Service Tax, IGST. Now, third type of GST has come into picture. And I told you the reason also. Why? This is the problem. So, there should be a mechanism in such a way the buyer state should get the GST, input tax, so that they can give input tax credit. So, in IGST what happens, and IGST is equal to 18%. Now, the seller of Andhra will raise a tax invoice on Telangana, because an interstate supply, and he will say IGST, Integrated Goods and Service Tax, saying that the place of supply, we will discuss what is place of supply. Place of supply, Telangana state. So he will collect entire 18. In intrastate, what is happening? He is collecting two, SGST, CGST. In intrastate of in a AP transaction, he will collect AP SGST and CGST. AP SGST will pay to AP state government, CGST will pay to central government. Over. In IGST, he is collecting one type of tax, only one, IGST, and pay entirely to the central government. Okay, he will pay entirely to the central government. So then what happens? Having paid IGST by the buyer in Telangana, now he will take input tax credit. Okay, full credit. Sir, in that there are two portions, central portion, state portion. Central portion, there is no issue, government will give. What about the state portion? Now the central government says, SSC having taken the input tax credit of IGST, now you can use this either for CGST payment or SGST payment. Okay, but input SGST you cannot use for output CGST, state tax, because you given that to the state, it went to the state pocket. So you can ask the input tax only from the respective state. You cannot ask the center. Similarly, vice versa. But IGST has a peculiar feature. IGST input tax credit can be used for payment of my output SGST, output CGST, output IGST. You got the point? Input SGST, only output SGST. Input CGST, for the time being understand like this. Output is CGST. What is output tax? Tax payable on sales. What is input tax? Tax paid on inputs. But whereas IGST, I can take the credit, I can utilize this credit for payment of my both SGST output tax, CGST output tax. If you use it for output CGST, anyway, center will be giving the credit, no harm. But the moment you use it for SGST, what is happening here in the background? Input IGST has gone to central government. Correct? Huh? Understood? Any doubts here? Input IGST is going to whom? Central government. Whereas law says you use such IGST credit for payment of your output SGST. Then is it not the state government is losing? Yes, of course. Because they have not got any input tax. The input tax has gone to center. But now the law says the moment you use the IGST credit for payment of SGST, state tax, the moment you use the input IGST for payment of output SGST, to that extent, center will transfer that amount to the respective state. In which state the IGST has been used for payment of their state tax. Now tell it. Now the state, is the state losing? No, no. But it coming a bit late because he has to utilize the input IGST for output SGST. Then center will transfer that money to state. So now even in the interstate transactions, government ensuring seamless credit. So whether it is intrastate supply, you will get ITC. Whether it is interstate supply, you are getting ITC. Understood? Shall I explain again? Clear? Very clear? Okay? Okay. So, to sum up, intrastate transactions will attract what? Yeah, loud. CGST? SGST. Interstate transactions? Now you understood what is this SGST, what is this CGST, what is this IGST, what is this confusion? You said only one GST, one tax, one nation, one rate. Then again you are saying SGST, CGST, IGST. These are all administrative mechanisms to ensure certain objectives, to achieve certain aims. Correct? Now you understood why these concepts? Or you so far only reading, okay, SGST, CGST, IGST, intrastate levy, SGST, CGST, interstate levy, IGST. But this is the reason. This is how they evolved. Once they said GST, then they said CGST, then they said SGST, then they said IGST. Okay. Now, what are the fundamental differences? First of all, multiple taxable events have been avoided. Manufacturing, providing a service, interstate, intrastate, service, luxury tax, entertainment tax, entry tax, octroi. No. Now I'll see whether there is a supply of goods or not. Whether you are manufacturing and then supplying, I don't mind. Whether you are buying and selling, I don't mind. Whether you are importing and then supplying, I don't mind. What do you mind? Are you supplying goods or are you supplying services? If you are not supplying goods, you are not taxable. If you are not supplying services, you are not taxable. That's fine. Earlier we used to see what is manufacturing. Then there are so many Supreme Court judgments. What is manufacturing? Hundreds of Supreme Court judgments, lot of litigation. SSC says this is not manufacturing. Department says no, this is manufacturing. Because department want revenue. They will say this is manufacturing. SSC doesn't want pay duty. He will say this is not manufacturing. And there is no proper definition in the act as to what do you mean by manufacturing. Okay. So now, large extent all these issues will go away. One taxable event, then seamless credit across the supply chain. Earlier, luxury tax, entry tax, octroi, etc., etc., etc. We don't even have the provision for input tax. So all they form part of the cost. They used to form part of the cost, and cascading effect, double taxation. And now credit is there. Reduction in number of assessing authorities. Central excise, one authority. Service tax, different authority. VAT, different authority. CST, different authority. Entry tax, luxury tax, octroi. Correct? Now, it will come to at least one to two. State authorities, central authorities. State GST authorities, central GST authorities. At least. And then, reduction of number of laws. We said no yesterday. Entry tax, 30 state laws. Octroi, luxury tax, VAT, 30 states, different laws. Though principle is same, but they write it according to their custom. Correct? So it will come down. Maybe worst case, how many laws we can have? Now by this time you should have understood. We are levying SGST, so there should be a law. Okay, for each state. There will be 30 SGST laws, but they will be almost unique. They will be same. 99%. Okay. Then you will have CGST law because you are levying CGST, and then IGST. That's all. Since you want to levy cess, one more act called cess. That's all. 4 laws. Reduced, reduced. And then reduced compliance burden, excise return, service tax return, VAT return, CST return, entry tax return. Now GST return. One return. Okay. And then increased monitoring by the tax authorities. Now, excise department, central excise department, central service tax department, central tax sales tax department, VAT department, luxury tax, entertainment tax. Now all these people will monitor only one tax. What? GST. Earlier they used to see only luxury tax. Now they are here. Earlier person who is looking only central excise, they are here. VAT people here. Central tax people here. Entry tax people here. And you have a portal, common portal. For everybody, one portal. Earlier for central excise, different portal. Service tax, different portal. VAT, entry tax. Now, focus increased. Correct? If I ask you to write 4 papers for an exam, it may be difficult for you. If the institute says you write 1 paper, I'll make you pass. Then, easy, no? So, increased monitoring, increase in tax base. When the focus of the department increases, one by one will come into the tax net. They send notice, they will monitor, they will say, boss, you are taxable, why you are not registered, come. And since all these have got eliminated, people also trying to come forward. Okay, let me register. Earlier, I need not have so much of complaints. One written, no? Let us uniform rates of tax for one product. Say this laptop across India will have only one rate. Earlier, it is not like that. Andhra might have different rate, VAT rate. Tamil Nadu may have different rate. Maharashtra may have different rate. Gujarat may have different rate. So if you are sitting in Andhra and doing business and open branch in Gujarat, you should know what is the rate in Andhra, what is the rate in Gujarat. Now you need not worry about that. All are same. Okay. So then we decided let us go for single taxation regime. But it is not that all the indirect taxes are clubbed. Only few, or to a larger extent, I would say. A larger extent, they said from Central Excise Act they clubbed, service tax they clubbed, CVD, countervailing duty. That means when you are importing goods into India, there will be a basic custom duty, and there will be a tax called CVD, countervailing duty, which is equal to the excise duty for the time being levied in India had they been manufactured in India. You got the point? Since you are buying from outside, you are losing excise duty, no? So no. Had this been imported, had the imported goods, had this been manufactured in India, what would be the excise rate I will charge? CVD. Then SAD, special additional duty, equivalent to the state tax. Then special additional, then central sales tax. In addition, some excise duty on textile and textile articles, excise duty on toilet preparations, all those have come. But these are important thing. And then VAT clubbed, that is the major one. Okay, that is the major one. Then entertainment tax, octroi, entry tax, luxury tax. These are all clubbed, and they said now I will call it as goods and service. I will not give so many names because ultimately goods, 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 service, service, service. So what is that you are living? Either goods tax, let us call it goods and service tax. Okay, but the following are not subsumed. Basic custom duty. So customs will continue, customs law. So when you are importing, basic custom duty will be there, and some tax GST also will be there. We'll discuss. And then excise duty or VAT on petroleum products, namely petrol, diesel, crude oil, aviation turbine fuel used in planes, natural gas. They continue to suffer excise duty, they continue to suffer VAT, they continue to suffer central sales tax. GST is not applicable. And then alcoholic liquor for human consumption. Liquor. State matter. State said we want time. It's a major revenue, right? You all know, right? It's a major revenue. So states doesn't want to give up so early. So for the time being, they kept outside the GST regime. Okay, now we understood my basics all done. We have not yet into the GST Act. Even yesterday's session, today's session, we are trying to only understand why GST, what is this, etc., etc. Okay. Now, what are the components of GST law? Where from we will read the law is Central Goods and Service Tax Act 17. Then each state will have its own State Goods and Service Tax Act. If it is a union territory, you will have Union Territory Goods and Service Tax. And for levy of IGST, only one law for the country. One GST, one central GST law, one CGST Act, only one. CGST, SGST Acts, as many states and as many union territories. But they will be almost unique. It's very, very minor, negligible differences. Okay. and then one IGST Act, one IGST Act, and one Compensation Cess Act, and rules, of course. If it is a central GST Act, there will be central GST rules. If there is a AP State GST Act, there will be AP State GST rules. Okay, that's all. Cess rules. CGST, SGST, Act, rules. IGST, Act, rules. Cess, Act, rules. This is what your law. That's all. Not beyond this. Okay. Very important terms. Okay. Central goods and service tax we discussed. Had we discussed and understood? Okay. Then state goods and service tax. We understand, no? What is this state goods and service tax? IGST. See why I discussed in advance all this. Now we are reading now. We'll enjoy it. Now I should not stop here and tell you what is this IGST, why is this IGST, what is the background. We learnt at once. Now, wherever they use, wherever it appears, I know what already about that. Okay, we know about this. What is this says? When states have agreed to move into GST, when the states have agreed to move to GST, they are losing some revenue, like central sales tax. The selling state used to get the revenue, right? Correct? Huh? Now it is going to buying state. Catching the point? Right? Right or not? It is a suffering for them. So far, I used to get seller state. Now you are telling you give it to buying state. Then central government said, no, boss, it will be compensated either by increase in revenue. Now tax base will increase. You need not worry about CST. It will be automatically compensated by increase in revenue. In addition to that, if there is a deficiency, of revenue, dear states, I will compensate. Who? Central government. They said, I will compensate, don't worry. And then they said, I will levy a cess. But I have to compensate, no? I need money, central. So they are collecting cess. And whoever is suffering deficiency, they are giving out of this money to the respective states. Now you understand why this compensation? Compensation. To whom? States. To the states. Compensation says. And then important terminology. What is intra-state supply? And what is, we have to learn. We have to learn. Interstate supply. What is export of goods? See, they remain the same, but treatment will be different under the GST law. The treatment will be different. Import of goods, import of services, supply of goods or services to SEZ, units, and developers. These are very important terms that we are going to discuss. Other important terms. So these are all we are going to read, understand. Supply. Is it necessary or not? Very important. Because the foundation of GST is supply. Taxable supply, exempt supply, composite supply, mixed supply. This is your syllabus actually. Each topics. Time of supply, place of supply, goods. We need to know, no, what is goods, because it is a supply of goods. Then what do you mean by goods? Then service, turnover, aggregate turnover. What do you mean by business? What do you mean by consideration? What do you mean by input? What do you mean by capital goods? Input services, input tax credit, all are your different chapters in your syllabus. Supplier, recipient, debit note, credit note, tax invoice, DC, appeal schedule. I just giving you a gist. And remember, before we take a 5 minutes break, the syllabus for your coming exam, May or June, will cover amendments up to 31st October 2023. So your study materials will not have these amendments made by Finance Act 2023, and there are some serious amendments in June, July. Okay, maybe from there itself you will get up to 20 to 25% of your total marks. Very important. And the institute expect you to know all the amendments. They want you to up to date it. They will test your knowledge on your amendments. So fall, May, June examinations, you have to go through the amendments, and this is your syllabus broadly, whether CA, CMA, or CS. Supply, the terms I have written already: charging section, place of supply, exemption, time of supply, value, ITC, registration, invoices, accounts, e-way bills, payment, TDS, returns. Okay. So you focus on these questions, but read, understand. It's ultimately you have to read, understand, and just before completion, I'll give you chapter-wise questions. Okay, chapter-wise questions. What could be, because it is a common sense what they should ask. So as a practicing chartered accountant, we'll have some idea how they should test. If I am the institute, what areas I wanted to test, because you will go to article, then you will become CA, you will practice. So what you should know, that we will know. We'll have some idea now. We may not know fully. We are not paper setters, but we'll have some idea. Okay, this should be asked. This should be asked. This should not be left at least. Those kind of questions I'll give. Okay, so I'll just take quick 5 minutes break. Okay, you can take some. Okay, roam around. We'll have water.